Now we invite you to read the disclaimer. The content presented on the Stone Research channel is for informational and educational purposes only. They do not constitute an investment recommendation or financial advice. Investing in the stock market, cryptocurrencies, and other financial instruments involves a high risk of capital loss. Consider whether you understand the risks involved and whether you can afford them. For more detailed information, see the video description. The full disclaimer is available at website stonersarch.io. Disclaimer. Please read it before viewing this material.
All sources used in the report and the full disclaimer are available at stonersarch.io. We invite you to listen to an abridgment of the full report on Alibaba. The entire report can be found on our website, stonersarch.io. Introduction. Alibaba Group, founded in 1999 by Jack Ma, has grown into a global powerhouse, representing the pinnacle of China's technology and economic progress. Its multifaceted operations span e-commerce, cloud computing, logistics, digital finance, and entertainment. Despite its success, Alibaba faces growing challenges, raising questions about whether its growth is sustainable or if its empire is built on an illusion of dominance. Deeper dive into Alibaba's SWOT analysis. Strengths. A massive user base. Alibaba serves over 1 billion annual active users across its platforms, creating a vast network effect. This extensive base provides Alibaba with unparalleled data to refine its algorithms and improve customer experiences. Technological ecosystem. With investments in machine learning, AI personalization, blockchain for supply chain tracking, and IoT devices, Alibaba sets itself apart as a tech innovator. Its AI-driven algorithms provide insights that improve inventory management, ad targeting, and customer retention. Resilient business model. Alibaba's diversified revenue streams spanning e-commerce, logistics, cloud computing, and entertainment make it more resilient to economic shocks compared to single-segment competitors. Weaknesses. Profit margin pressure. To maintain user loyalty amidst rising competition, Alibaba heavily subsidizes prices and offers discounts, which has eroded its profit margins, especially in the core e-commerce business. Regulatory overhang. Alibaba's ambition has drawn increasing scrutiny from Chinese regulators. These challenges, including antitrust fines and stricter data privacy laws, have forced Alibaba to rethink its aggressive expansion strategies. Limited penetration in mature markets. In regions like North America and Europe, Alibaba struggles to compete against well-established players like Amazon, owing to cultural and logistical barriers. Competitive landscape and strategies. Alibaba is not only battling domestic competitors like JD.com and Pinduoduo but also faces a global stage where it must compete against Amazon, Mercado Libre, and Flipkart. Each competitor employs unique strategies to carve out market niches. 1. JD.com's supply chain advantage. JD.com's ownership of logistics infrastructure allows it to offer faster deliveries, challenging Alibaba's Cainiao network. 2. Pinduoduo's social commerce model. By leveraging group buying and targeting rural consumers, Pinduoduo has captured a market segment that Alibaba initially overlooked. 3. Amazon's global dominance. Amazon's strength in logistics, customer service, and Prime subscription services poses significant barriers to Alibaba's international growth. Strategic countermoves. Localized platforms. Alibaba has invested heavily in platforms like Lazada, Southeast Asia, and Trendyol, Turkey, to localize operations and compete more effectively in regional markets. Technology-driven personalization. With AI and big data, Alibaba tailors shopping experiences, offering targeted promotions and dynamic pricing to engage users and boost sales conversion rates. Regulatory and geopolitical challenges. Alibaba operates under the shadow of regulatory scrutiny, both domestically and internationally. The report highlights several key challenges. Antitrust actions in China. The Chinese government fined Alibaba $2.8 billion for monopolistic practices and has since imposed restrictions on exclusive agreements with merchants, forcing Alibaba to open its platform. Blocked Ant Group IPO. The failed Ant Group IPO in 2020 underscored regulatory concerns over Alibaba's fintech ambitions. This event not only led to tighter financial regulations but also disrupted Alibaba's plans to dominate the global fintech market. Cross-border data concerns. As Alibaba expands its cloud services and e-commerce platforms globally, concerns over data sovereignty and cybersecurity have intensified. Countries like India and the US have imposed restrictions on Chinese tech firms, citing national security risks. Alibaba Cloud, the rising star amid challenges. Alibaba Cloud has emerged as one of the company's most promising growth engines, especially as digital transformation accelerates globally. Key points include: 1. Market position. Alibaba Cloud is the leading cloud service provider in China and ranks fourth globally, following AWS, Microsoft Azure and Google Cloud. 2. AI-powered solutions. With AIaaS AI as a service, Alibaba Cloud delivers advanced solutions for industries such as retail, healthcare, and logistics. 3. Global expansion. Despite geopolitical barriers, Alibaba Cloud has made inroads into emerging markets, leveraging its expertise in AI, data analytics, and scalable infrastructure. Emerging opportunities in new markets. 1. Southeast Asia. Through Lazada, Alibaba is capitalizing on the region's rapidly growing middle class. Its strategy includes tailored promotions and localized logistics solutions. 2. Africa. Alibaba's partnerships in Africa focus on enabling small and medium-sized businesses to access global markets through platforms like AliExpress. 3. Digital payments in emerging economies. Alipay's global expansion provides a foothold in developing regions where digital payments are still in their infancy. Challenges in sustainability and ESG, environmental, social, governance. The report emphasizes Alibaba's growing focus on sustainability as a strategic priority. Initiatives include: carbon neutrality goals. Alibaba has pledged to achieve carbon neutrality across its operations by 2030, with an emphasis on renewable energy adoption and supply chain optimization. Circular economy initiatives. Efforts to reduce packaging waste and promote sustainable practices among merchants and logistics partners aim to align the company with global ESG expectations. Governance reforms. To rebuild trust after regulatory challenges, Alibaba is increasing transparency and enhancing corporate governance practices. Looking ahead, the future of Alibaba. The report concludes by exploring scenarios for Alibaba's future. 1. Optimistic scenario. If Alibaba successfully adapts to regulatory demands, expands in emerging markets, and leverages technological innovation, it could retain its position as a global tech leader. 2. Cautionary scenario. Without effective strategies to mitigate geopolitical tensions and regulatory pressures, Alibaba risks stagnation or loss of market share to nimble competitors. 3. Breakthrough innovation. Investments in AI, quantum computing, and blockchain could redefine Alibaba's business model and create entirely new revenue streams, securing long-term growth. Conclusion. Alibaba stands at a critical juncture, balancing immense growth potential with daunting challenges. Its ability to navigate these complexities will define its future. For your podcast, this narrative can be framed as a reflection on how global tech giants navigate uncertainty, adapt to change, and seek innovation to maintain relevance in an increasingly competitive and regulated world. This enriched version integrates more insights from the report, offering a nuanced and engaging discussion for your audience. Now we invite you to a short commercial.
Want to know everything about the company or project you are investing in? Contact us, info@stoneresearch.io. Visit Webeast, stonerzarch.io.
Thank you for listening. We invite you to follow our website, stonerzarch.io. We are also at x.com/stonerzarchio.